Let's think about French politics back at home, though, and what that means for bond markets. Joining us now is Stanislas de Bayencourt, who's head of fixed income and asset allocation at Sycamore Asset Management. Stanislas, very nice to speak to you. So the news overnight seems to be that President Emmanuel Macron has called for talks in the centre. So he wants those centrist parties to see if they can do anything to put together a government so that he can try, so that the far right and the far left can both be kept out of power. Does this sound like a likely outcome, given what we saw voted for on Sunday? Does this sound like an outcome that the bond market will bet on?
That would be clearly the best outcome for markets, but there is no big bet on that today. It's still a very complicated situation. What is sure is it is going to take time for that to settle and to take place. Both extreme parties, and especially on the left side, are calling for Macron to give them the top job of prime minister. So clearly for markets today, they've been quite resilient so far. The French spread is at about 65 basis points, back from 85 at the top. So I think markets have understood that we are going to have a few weeks ahead of us of intense negotiations. They are now quite used to it. I mean, some other European countries like Belgium or previously Italy have had this difficult situation of building coalition. I think in French case, the difficulty is that there is a lack of experience of building coalitions. So that's why it's going to take more time. And after that, I still think it's going to be a bumpy road ahead of us in the next few years, as both in case of a central coalition, which is not certain, there will be a huge challenge from extreme parties on each side.
OK, so even if we saw that centrist coalition come together, there could still be those extreme challenges. So where does that mean that we should expect the spread to be over the years ahead, Stanislas? This might be an impossible question to answer, but you referenced how it's come down from those highs above 80. This is the spread of OATs over bunds, of course. It's come down from those, but it's settled at around 65, so well above the 45-50 that it was at before Macron called this election. Where would you, does that make sense for it to hover around this kind of area, 65?
Yes, completely. I think, well, French spreads will be durably impacted by what happened, and also because the road ahead is a bit more complicated. I mean, from September, October, there will be the negotiation for the 2025 public budget, and we know that France is above 5% in terms of public deficit, and rating agencies are already starting to put a bit more pressure. S&P downgraded France at the end of May. So this new coalition will have a very difficult job, whatever is the coalition, even if it's on the left side or at best on the central side. So it's going to be a difficult job to be achieved going forward. There will be important measures to be taken. There is this deficit issue to be tackled. So I don't think, well, it will be difficult for the spreads to come back to the previous level in the 40 basis point range going forward.
Well, what sort of makeup of coalition would be preferable to the bond market, given you already had, Stanislas, these concerns about the budget before the snap election was called?
Clearly, well, what Macron is calling, so a central coalition, not taking both extreme sides, so neither Rassemblement National on extreme right or the extreme right with LFI, is clearly the best situation for markets. Markets tends to like young parliaments because it avoids extreme action on one side or the other. But again, it's a call from Macron. But so far, there is no evidence it can take place. I mean, it will be clearly received very positively by markets, but it's not a certain issue. Well, it's not a certain thing we can clearly bet on today.
And so for equities, do you see any opportunities out of this political uncertainty?
Well, clearly on the equity side, banks and insurance like AXA, BNP Paribas, or Societe Generale were heavily impacted by the situation. The fact that there is a clear lack of visibility today on what can happen doesn't enable to have a real rebound for this company. Same for utilities, regulated utilities company, which have, of course, a clear link with regulation to French state. They were heavily impacted. All these stocks for the moment are staying a little bit where they are. Going forward, once a government is formed, once there is a true a coalition taking place, if it's a central coalition, that might give an opportunity on that stock. But I don't think it's going to take a little bit of time. I think what we are seeing from investors so far, even though Europe had the good first half, I mean, economic situation is improving. We have the ECB starting to cut rates. We have inflation slowly going down. So we have a pretty supportive background. But this situation, the political situation in France, is a little bit not enabling this strong rebound for the stocks which were impacted by the decision of dissolution on June 7th.
Update us, Stanislas, on your thinking around the corporate debt market in France. We saw some issuance in France ahead of the elections, corporates trying to get in ahead and anticipating that there could be volatility, and we've certainly seen a bit of that. But maybe yields have not blown out and have remained tighter than some might have expected. How do you assess what we've seen in corporate debt?
I think that, well, the credit markets, and when we're looking at fixed income corporate debt, has been very dynamic in terms of primary issues, even though going into the elections, so post the shock of the announcement, the markets were dynamic. Demand was strong, both from local investors for France, but also European and international investors, and even on high yield names. So I think that was a pretty strong signal that even if it was a bit more volatile on the equity side, on the fixed income side, and even on the corporate debt side, there was strong demand from that, and we saw a lot of refinancings, which is pretty good for the maturity wall, which was coming in 2025. So from that point of view, I mean, it's really business as usual. Things are going pretty well. Corporate spreads are nearly back to the narrowest level for corporate credit and, in France and globally in Europe. So from that point of view, there is less impact than on the equity side.
And Stanislas, we've been talking a lot about the drama in Washington, kind of distracting from the NATO summit. But I wonder for you, how concerned you are about the headwinds from the US general election?
Well, I think this is a very good question. I think there's two very strong signs. The first one is trade wars have already started everywhere. And Europe is clearly in the middle of it, and it's a difficult situation with China and, of course, with the US, even before the election and the outcome of the election. So that's the first message. I think the second message we get from NATO is clearly, defense spending will quite likely move up in Europe going forward. There will be more to spend there. So this is also something to take into account when you look at budget deficits and things like that. There will be an effort to be made by states. So both trade wars are making the situation a bit more complicated for Europe. And there's also this defense issue, which is clearly now at the center of politics, and it's going to stay for some time, with important investment needed going forward.
Okay, Stanislas de Baillencourt, Head of Fixed Income and Asset Allocation at Sycamore Asset Management. Lovely to have you with us from Paris on the latest in the geopolitics and your outlook for France and the horse trading impact on the bond market. And also interesting comments on corporate, on the corporate debt situation.
Yeah, absolutely. I mean, he was saying that it's actually business as usual in corporate debt in France, which is quite incredible, isn't it? But it's a reflection of the global nature of some of those big players in France.
Yeah, indeed. I thought it was quite funny, our clip from the former Italian president saying that Macron's gamble could work out for him. It's a bold play, but interesting to hear Stanislas saying as well that a hung parliament ain't such a bad thing if it can work out well. But coming up on the programme, you do not...